From Nairobi, this is the African Economy Review, where Africa's data meets the world economy. Good morning from Nairobi. My name is Gabriel Wekesa, your information influencer at Infobroker World, and you're listening to the African Economy Review. Today, I'd like to take you with me to Rabat, where the Africa Investment Forum 2025 is unfolding, a gathering that is not simply a conference, but a marketplace where Africa negotiates its economic future in real time. As always, let's look at what the data tells us. Here in Rabat, more than 2,500 delegates have come together, representing governments, institutional investors, global banks, private equity funds, and development partners. They are examining 41 fully screened, investment-ready projects, a pipeline verified for feasibility, financial structure, and environmental due diligence. According to the forum's documentation, 39 of these projects are already fully bankable, ready for investors to sign off in the closed-door boardrooms that define the AIF model. Behind these numbers lies a story about Africa's ambition to close a financing gap, which, alone in infrastructure, is estimated at 130 to 170 billion US dollars per year, according to the AfDB. The forum was created to bridge exactly this divide by moving conversations away from promises and towards transactions. And since 2018, the platform has mobilized more than 225 billion US dollars in investment interest across the continent. Walking through the quiet corridors between the deal rooms here in Rabat, one senses a growing confidence. Countries with strong governance frameworks and investment pipelines are attracting the largest commitments. From the material available, Nigeria again stands out, securing around 7.6 billion US dollars in commitments, notably for energy, agro-industrial development, and digital backbone expansion. One of the flagship projects is the $2 billion national fiber backbone, with the AfDB preparing to raise up to 800 million US dollars, and the World Bank expected to contribute 500 million through concessionary financing. Ethiopia is positioning itself as one of Africa's major infrastructure destinations, driven by its Bishoftu International Airport, a new aviation hub envisioned to reshape regional mobility and logistics. Morocco, the host this year, is drawing billions into green energy and transport, benefiting from its political stability and long-term industrial strategy. South Africa, Senegal, and Côte d'Ivoire round out the group of leading beneficiaries, driven by energy investments, industrial development, and regional transport corridors. But investment is not just about geography. It is about sectors that define Africa's next economic chapter. And the data from this year's forum makes the priorities clear. Infrastructure dominates the capital pipeline. From airports to highways to digital networks, energy is the second pillar, with more than a dozen major renewable projects on the table: solar, wind, decentralized mini-grids, and the facility for energy inclusion. The role of new investors is striking. Pension funds, sovereign wealth funds, and specialized climate finance institutions are stepping in at a scale not seen before. One can feel the momentum around clean energy. Institutions such as the European Investment Bank, Norfund, Africa 50, the Africa Finance Corporation, and several Gulf-based sovereign funds are positioning Africa as a key geography for green transition capital. Much of this money is actively searching for bankable projects, and the AIF has become the continent's center of gravity for precisely that deal-making. Yet the forum is not only about capital, it is also about recalibrating Africa's place in the global economy. The AfDB has revised Africa's growth outlook upward to 4.2% in 2025, supported by moderating inflation and rebounding investment. Reform-driven countries like South Africa, Nigeria, and Ghana are stabilizing currencies and rebuilding investor trust. At the same time, major international partners, from the EU to the GCC, are signaling that Africa is a strategic investment destination, not an aid recipient. From Nairobi's perspective, this shift is essential. East Africa's economies, Kenya, Tanzania, Rwanda, depend heavily on regional trade corridors and reliable energy. Every new dollar pledged here in Rabat has the potential to strengthen the logistic arteries that connect Mombasa to Kampala, or the energy grids powering Ethiopia's manufacturing, or the digital networks that enable Kenyan fintech to scale across the continent. As I file this report from Rabat, the boardrooms are still busy. Deals are being negotiated, terms refined, guarantees structured, What is clear already is that Africa is not waiting for the world to define its economic trajectory. It is articulating its own priorities: infrastructure, energy, digital transformation, industrial value chains, and backing them with concrete, bankable projects. In data, we see resilience and a continent steadily claiming its economic voice. Thank you for listening to the African Economy Review. From Rabat and from Nairobi's perspective, I'm Gabriel Wekesa for Info Broker World. Let's continue to follow the numbers, because the numbers tell the story. Thank you for listening to the African Economy Review, where Africa's data meets the world economy. If you'd like to explore the figures, charts, and insights behind today's discussion, you'll find detailed references and contact information in the show notes. You can also follow the latest updates and analysis on infobrokerworld.com and through our official social channels. I am Gabriel Wekesa, a virtual information influencer from Nairobi, powered by advanced AI voice technology. My voice and commentary are AI-generated, designed to bring clarity and data-driven storytelling from an African perspective. If you found value in this episode, please share it, subscribe, and leave a short review. It helps more listeners discover how Africa's economies connect with the global landscape. Until next time, clarity through data and perspective through understanding.